What is going on, guys? So today I want to address a question that I've been getting a huge amount since the end of December 2020, when I kind of announced that my trading style is changing and just explained a little bit about what I'm doing now. The main sort of takeaway that I want people to get from this video is the importance of remembering why we trade. What is the main reason why we trade? As a trader, I don't care how I make money. I'm not attached to a specific style. I'm not attached to specific pairs. I go wherever I see the most opportunity. Our main job is to, in the most efficient, low risk, accurate way as possible, pull as much profit from the markets. And it shouldn't matter to you how you do that. So I know that can be confusing for people, as you've been getting great results. You've been in this industry now for 7-8 years. So why does it make any sense that you would suddenly switch your trading style? Because my trading style has been pretty much the same throughout the whole of that period, just with tweaks and adjustments, switching time frames, depending on how the market characteristics are acting, and then also to suit my lifestyle as well. So a great book here, which I would reference for people to check out, Jim Collins' Good to Great. And in that, he discusses a lot about how good is the biggest enemy of great. So when you have something that's already good, when you have something that's working, it's very, very hard to drop your ego because you have so much attachment to it, which creates excess potential. It's very hard to then go and explore a different way of approaching the markets when you already have something that is working. And the biggest key takeaway, as I said, is I want people to remember what our sole job as traders is. And when you see an opportunity, when you see a different way to approach the markets, you shouldn't be fearful of being a fool. You shouldn't be fearful of exploring the unknown. So in this video, I'm going to be going over pretty much what my previous trading style was, very high level. Have a quick little look into the very beginning of my journey, the pattern that I identified, which led me to continue to research and look for more information on this sort of style, how I found SMC, how I then found ICT, and my sort of experience in both of those, and then sort of continuing to study, and also what my current trading plan looks like, as I have made adjustments very recently, which I'll talk about more at the end. So for those of you who don't know me, you may be new to this channel. I've been in the financial market since 2010, when I co-founded a wealth management business, and we grew that to over 150 million of assets under management with only 70 or 80 high net worth individuals. This is a very different game to trading. This is investing for the long term, and the type of individuals, these high net worths that we're dealing with, what we're essentially doing is ensuring that they're building their pots of money in the most tax efficient way possible to pass down to future generations. A lot of these clients wouldn't touch this money. It would literally just be pots which they're building and investing over a very long time period, 30, 40 year time horizons, versus trading where you're literally looking to get in and out and just compound that account up. From there, I found trading in 2014. I had absolutely no knowledge or understanding of technicals, price action. I'd never looked at charts before. So in that wealth management business, as I said, it's a very different game. Our biggest expense was hiring a team of analysts, which we work with to build the portfolios in these tax efficient silos for our clients. So it's a very different space. I had absolutely no prior knowledge to trading coming in. Since I found trading, my style has pretty much, the strategies, I guess, have pretty much remained the same throughout, but the style has slightly changed. So I've done day trading, I've tried it scalping, I've tried it on the higher time frames, and it kind of changed over the years relevant to what my lifestyle would be. And then obviously market environments, conditions change, as we know. So tweaks and adjustments have been made along the way to make sure that it's most accurate and efficient in the current market conditions. So for the last 3 years or so, I'd say my style has very much been more of a swing approach, where I'm looking to capture daily runs. It's very much a retail built strategy. So you're using price action, you're using indicators to build confidences, to build a thesis for why you should be entering a trade in either direction. That's pretty much been a high level overview of what my previous trading style was. So there's two major reasons why I started exploring. So I got to this point where, before, it was probably 2017, 18, trading started to become my main income source. The profits from trading started to become my main income source. And then it quickly very much became the overwhelming contributor to my income source. So in 2019, I had to make the decision, time cost opportunity. It doesn't make sense to have so much of my time focused on a business, even though we were pulling fantastic profits, very lean business, not the time involvement that you'd expect because we'd set it up in that way. It was very much a lifestyle business. But the time that I was having to put in and the missed opportunity from trading when I'd sometimes have to miss a trade because I'd be in a meeting, etc. So it didn't make any sense to continue being involved in that, using my time in that space, because the profits that I was pulling from trading massively overwhelmed the amount of profit that I was pulling from that business. So in 2019, I stepped down from a client-facing role. In 2020, the end of 2020, I negotiated and I exited that business and have no longer further involvement in it. So at that point, in around October 2020, my sole focus was just on trading, and I had all the time that I possibly wanted to put into what's generating me the most amount of income. So let's move on to what I sort of found, which made me start digging into other styles. So at the beginning of 2020, and this is one of the major reasons why I started exploring different ways to generate profit from the markets. The beginning of 2020 was the best quarter I've ever had in the entirety of the 7-8 years that I've been trading. I returned pretty close to what I would expect to return over an entire year, but in a quarter. When all the COVID bullshit happened, markets reacted in a way which I've never seen before. We were in an environment which I'd never experienced trading in before. And the characteristics of the market for me just completely changed. So after that great quarter, that's when everything sort of started to really kick off. All the lockdowns came in, and I started to see the markets moving in a way which wasn't in sync with how I approached the markets, trying to capture complete daily runs, because everything was just running in one direction. It was extremely overextended and it wasn't giving any sort of meaningful pullback. One, to allow me to catch a little bit of a pullback with a quick intraday move, but also be able to get into that next part of the daily run. They were just going. For the rest of 2020, my results were pretty stagnant in terms of my swing account. I still had a great year because I had that quarter. So at the end of that quarter, the majority of my returns made up for the rest of that year was day trading crypto. So aggressively day trading crypto, because we were very much in a bullish run still. And I had some amazing days, some big figures for me. I'd hit 3 6-figure, so over 100K profit days from day trading in that period. And that was new to me, so I shared it, etc., etc. So I still had a fantastic year in terms of returns, but my actual main swing portfolio, after that initial 3 months, I didn't really get much going on because everything wouldn't pull back to allow me to get back in. I'd end up taking a lot of trades, they'd go into small profit, they'd end up stopping me out for break even or a small loss. And that kind of repeated for the rest of 2020. So that made me start to think the environments aren't currently set up in a way where I'm getting huge amounts of opportunities with my style. I'm doing a lot of sitting on my hands. It's probably the least amount of trades I've ever taken during a 9-month period. So at that point, I started exploring. This was the very end of 2020. I started exploring, trying to make those strategies work on the micro time frame. So essentially building a scalping strategy using the strategies that I trade in the higher time frames, but just bringing them down to lower time frames. And I did that for 4 or 5 months. Couldn't get it to be profitable. I back tested it, I live tested it, and I just couldn't get it to be profitable because the strike rate was too low. When it went, fantastic. The risk reward's great because you're scalping, so the moves happen very quickly. You make very nice profit. It's very good. However, the majority of the time, what I was seeing was I'd have one of those moves and then I'd have 6, 7 of them go against me. And that's not something I'm interested in doing. So my plan when I was going into that was to develop a scalping strategy, and I could split my capital 70-30 or 50-50 in swing and in scalping strategy. And that way it would work well in unison. It would allow me to wait for my longer term plays to start developing whilst the environment characteristics of the market start to adapt and we start to see some more trending markets rather than just mooning. That was my whole plan going into it, to allow myself to still make money through the market, still be involved every day because I have the time now. But I just couldn't get the strategies to work on the micro timeframes. Very much the beginning of 2021, it was a similar sort of thing. There was a little bit more opportunity for my swing style, but it was still not what I was used to prior to the beginning of 2020. From that data that I'd built up, and everything as traders, this is why it's so important to record your data. This is why it's so important to have all your screenshots, to have your journaling. Because what I did was I go back through that data and I started to notice a pattern on these micro time frame plays in terms of the scalping strategy. And what I realized was a lot of the time my bias was correct, but what would happen, the timing was wrong. So the way that the strategy that's developed, I'd take my entry, it would go small into profit, it would quickly come and take me out. It would go to an extreme, and then it would then shoot in my direction. So I saw this happen over and over again, and I just knew from my experience, from the amount of time that I've been in this market, there's something here. There's a pattern here which I'm seeing develop over and over. I need to investigate this. So what I started doing was researching, seeing if anyone else had noticed this pattern. In my previous style, I'd never really spent any time on those micro timeframes. Wasn't really ever going down underneath the 1 hour or the 15-minute. It wasn't something that I'd observed before. And I thought, this is happening so much, someone else must have noticed it. Someone must have also have this data. They've researched it, and they must be out there teaching this way as well. So I thought, okay, I'll do some investigation, started doing some research. And that's where I came across SMC concepts as a style, smart money concepts. And straight away, I was instantly put off by it. The perception that you get when you first find it is, it's massively off-putting. It's everything that I hate to see. So a lot of people on Instagram claiming these wild results, 50%, 60% returns. And straight away, that raises big concern in my head. However, because I have the data and I know there's something behind this pattern that I keep seeing and they're talking about it, I thought, okay, I'll investigate this. The reason why I say the perception with SMC is extremely sketchy. We know how much bullshit is in this industry. What I would typically see, the massive discrepancy that I would see that is very off-putting is the people teaching this. I couldn't find anyone who was doing this with meaningful capital of their own. Everyone was trading on a funded account. There's nothing wrong with funded accounts. So they have their drawbacks, but overall, it's a great way to get more capital than you currently have if you don't have a business that's generating you income where you can take dividends, pull the profits, put it into your own capital, or you have a normal 9 to 5 and you don't have any sort of meaningful amount of money saved up. So I think funded accounts are great. A lot of the narrative is you're having these 50, 60% months, you're catching these huge moves, maybe even more. You just have to use some basic logic and maths to figure out that there's a huge discrepancy from what a lot of these people are claiming versus the actual reality of it. So say that someone was funded 100K, which is very little amount compared to what you can get funded from some of these companies. If they're having a 50 to 60% month every single month, which is what their claim is, within 3 months, they'll have enough profit to take out from that funded account and have a bigger account of just their own personal capital, bigger than their funded account. But no one had done that. And also when you just think about the basic maths, if someone was realistically returning 50% within a year's time, you could start with 10K and you'd be a millionaire. And again, there was none of this. So there's a lot of discrepancy. So that's kind of the perception that I see when I first found these SMC traders. And as I said, because I had the data, I continued to explore. I knew there was something there because I'd seen it for myself. And I thought, maybe these guys haven't figured it out completely, but I'll learn and see what they're about. So from there, I decided, let's dig in. What's the worst that can happen? Drop your ego, drop your perception. Don't be afraid to be a fool, because this style was extremely different to the style that I'm currently trading and also was for the last 7 years. Started to learn, started to understand the concepts, really started to gain confidence in it. At this point, I went live with a reasonable amount of capital. So what happened in the first 10-day period after I'd gone live with capital was I had just under 20% return, which was crazy to me. It was crazy to me. And the reason why it was crazy is it wasn't just one trade. So it wasn't just a one-off fluke, a one-off luck. It was 4 or 5 trades and no losses. So that consistency was there and the confidence was building in me even more that maybe this is some sort of fucking holy grail. And what quickly happened the 2 weeks after that, I gave it all back. Then I went through another cycle, which was exactly the same, big profits in the first sort of 3-4 days, and then gave it all back. I'm experienced enough. I'm intuitive enough. I've been in this market for a long time, and I know when I'm missing something. So straight away, I knew that I was missing something. I had enough knowledge to understand it's probably the higher time frames, because that's something that massively lacks in SMC. I'm sure a lot of people who maybe trade SMC may have experienced this, but there's no real focus on those higher time frames. And from there, that's where I started exploring a bit more, and I found ICT. ICT is, once you start digging into it, a huge amount of content. The knowledge is unmatched by anyone else, in my opinion, in this industry. The only criticism that I'd have about him is his teaching style, but I think that he actually does it on purpose so that only the people who really, really put the time and work in will ever sort of have 50% of his knowledge. So I found ICT, started going through Inner Circle Trader for anyone who is unaware, started going through all of his content and just really absorbing it. And like I said, his content there's a lot of rants that go on. A 2-hour video could be done in 30 minutes and you'd get the same sort of value and the same takeaways and lessons. But I persevered through it because I could see his focus was very much from the monthly down. He's going monthly down all the way, if you want to, down to those micro timeframes. This is where I got a sense of what I'm missing. The thing with that information, it's very overwhelming, but you realize quickly that a lot of these strategies like SMC, a lot of these different concepts that are all based on liquidity are all diluted versions of the information which he gives out. And that made it very obvious to me. SMC is something where they're just missing this huge gap, which is anything higher than sort of the 4-hour chart, which you need to have. You need to have that factored in and to be able to reduce the amount of trades that you're taking, understand which ones you should be taking, which is going to increase your strike rate. And that's when you're going to start getting that consistency. So that was a big lesson for me. I continue to educate myself in ICT's teaching. I also reached out to a friend which I could see was trading a similar style. We're now very good friends. Mac Gray, make sure to check his YouTube channel out below. Big shout out to Mac. I will put that in the description. But I reached out to Mac and I said, this is sort of the journey. I found SMC because I'd seen this pattern on the micro time frames when I was trying to get a strategy to work on the micro time frames the way that I was previously trading. What I'm trying to build is a scalping strategy that I can trade in unison with my higher time frame strategy. And that will give a nice approach to the market where I can wait for my longer term plays, but also be making money throughout the week as well. And I said to him, start with SMC, realized quickly I'm self-aware enough to understand I'm missing something. I think it's the higher time frames using that intuition. Found ICT. I'm going through his content now. It's extremely overwhelming. And sort of asked for his sort of views. What did it look like for him? Had he been through something similar with SMC where it doesn't consistently work because they're missing something out on something big? And then did you ever find this guy called ICT? What do you think of that, etc.? And he very kindly started sort of teaching me one-on-one. We'd talk every New York session. I'm pretty sure we've talked every New York session since probably July, August last year. He sits there and he talks to me. He allows me to ask stupid questions, be a fool. And that's something that not enough people are prepared to do, is look a fool. We have to be able to look a fool because when you're new to something, you have to ask that stupid question, and it's better to ask it now than have to ask it 4 months down the line. We started talking every single day throughout those New York sessions, and it just instantly started to get more clear and clear for me. And throughout that period, through the end of last year, I definitely went through periods of being super confident with it, and then sort of going through more content, understanding something new. And then I just was overwhelmed with the information, and I sort of would sit there and I'd go, I've got no idea what I'm doing. Started to gain more clarity at the end of last year, probably the beginning of Q4, started to get real clarity on it, started to build that confidence. So something that ICT preaches is that you have to take his knowledge, take his information, and develop your own style and strategy around it. And I think that's super important for people to understand, because when you're trying to emulate all the information that he gives you, you don't know how to think like him. So if you go down this road of trying to study exactly what he thinks, exactly all of these different concepts that he's built from his decades of experience in the markets, it's going to take you a long time to really figure it out, and you're going to have a lot of conflicting information before it really starts to click. So that was a big thing for me, realizing you're not trying to copy his style, you're trying to take the concepts and figure out a way to make it work for yourself. So I'm now trading solely this style. I'm no longer trading, this is very recent, I'm no longer trading my previous style. The biggest reason is it's just an absolute no-brainer. The outperformance that I'm getting from these concepts and this style of trading just massively outperforms how I was previously trading. Number two reason is also when you're digging into these concepts and you're learning all this new information, you realize a lot of what this is built of is taking advantage of those more retail style strategies. And that's what provides the liquidity. That's what allows you to make money, is actually, as we know, if you make money, someone else is losing money. So that's what allows you to win over those other strategies. But the biggest thing is just, it's a no-brainer. As a trader, as I said at the beginning, and the key lesson to take away is I don't care how I make money. I want to make as much as possible. So when I see something that's outperforming another style so much, it doesn't make any sense to put any more time into that previous style. So now this is the sole way I'm trading. But at the beginning of this year, I increased the percentage split that I was trading in this account, but I was still very much trading the other style. Nothing's really happened this year at all. It hasn't, again, markets, the characteristics and the environment for the market just aren't suited for that style of trading currently. So I've actually made that decision, cut that style off. It doesn't make any sense to continue to put time and effort into it. And I'm now trading a larger portion of my capital. I'm not trading 100% yet. I'm ramping it up over the year. I increased the percentage of my overall capital pot, which I trade with. I've increased it at the beginning this year, and I've increased it now as we approach the end of Q1, and I'll continue to do that over the year as my confidence builds until it's at 100% of my capital being utilized. So that's kind of where I'm at now, and I hope that you take away those lessons of not fearing being a fool, not getting comfortable with having something that's good, and remembering that our main focus as a trader, no attachment to style, no attachment to strategy, is to make the most amount of profit for as little risk as possible from the markets. But that's going to wrap this video up. I know there's going to be some further questions about this. So what I'm going to do is my next video is going to be a Q&A. You can ask trading, you can ask about the concepts, you can ask about lifestyle, whatever you want. I'm going to be putting it on Instagram once this video has gone live within 24 hours. So make sure that you're following me, and I'll do a Ask Me Anything question box. I'll pick 5 to 10 questions from the questions that come in, and I will answer those as in depth as I possibly can. So I hope you've enjoyed the video. I'm going to be much more consistent with my YouTube now because I have more time on my hands and I've got a lot planned. So I will catch you on the next one. But for now, peace out and take care. Goodbye.
I pull up you deep on my niggas, consider it's pivotal. Trap through the app, make her clap it, don't cap it, she tapping it fast. I think that you know they be